Hello Freedom Builders and welcome back to the channel. This is Hans Nielsen speaking, and we need to have a quick look at the charts regarding the latest days corona development, the development in the interest rates from Fed, and also a little historical view here. Because actually the first video I had planned to make today was a little recap on how my portfolios have been doing over the last couple of months here with all the turmoil in the market. But I will make this one instead and then the other one later, because this is the one that is getting the most heat right now and there are a lot of questions about it. Alright, first of all, the market has been dropping. You know that if you are invested in stocks or just sometimes open your news feed. So the stocks have been dropping. We have the S&P 500 futures here. Now, what happened yesterday, or at least what happened over the weekend, was that a lot of rumors were coming out that Fed, the US central bank, would lower the rates. And that actually made the market stabilize a little, but not enough. And then yesterday, Fed came out saying that they would pretty much immediately cut the interest rate with 1.5%. That is a lot, and it is really an extreme measure that they did it before the normal FOMC meeting. So that one was supposed to be really putting some fuel on the market. But what happened was that the market tipped up a little bit, and then the sellers came in. It was like, Alright, I'm back. My chart just disappeared for a second. It was like there was a big bunch of sellers just waiting for something like this should happen, and they were selling in big bulks up here, and they were pushing the price down. Then today, or here tonight, Danish time, the price have gone up a bit, and that has pushed the Scandinavian markets and the European markets up as well. So it is like the sellers and the buyers are really having a big fight down here. Now, the big question, and to be honest, of course, I'm not a fortune teller, so I cannot tell you what is going on in the future. But I'll show you a couple of numbers today that makes me think that we might have to go further down. First of all, I'll give you a little historical perspective here, because a lot of people are saying, yes, we just need to buy the dip, and that might be right. It might be so that it's a good idea to buy right now. 2 weeks ago, the market went down with 1.2%. Then last week it went down with almost 12%, and this week we are up 3.5%. And that could make a lot of newcomers saying that we just need to buy. And when I say newcomers, I pretty much mean people that have only been investing from the financial crisis and forward. If we are taking a look at the price development in 2008, and just I'm not saying that we are going to have a huge crisis and it's going to be 2008 all over again. What I am saying is that if people are claiming that we can only go up from here, then please be aware of what happened in 2008. And I know the situation was completely different, so I'm not comparing anything here. I'm just saying that people thinking this cannot happen, we cannot go any lower because the companies are making money and so on, that is simply an illusion. Because I was investing in 2007, 8, and 9 too, and at that point, there was actually some very good financial numbers. The companies were making money in 2006 and 2007, and that was the numbers we were looking at. But all of a sudden, something changed. And I'm not saying that the entire coronavirus could be another of these changes, but let's just presume that it is. Then it can pretty much turn everything upside down. Because a lot of the numbers we're looking at today, when we are analyzing a company, they are looking backwards. Of course, there are estimates, but these estimates can easily be wrong, especially if the supply chains and the demand for products are also all of a sudden disappearing. And then we can actually see a scenario where the numbers we are analyzing are completely wrong. Just have a look here at the development in price in S&P 500. we had here, you can see on the little number up here, you can see what the week was making here. It was making minus 4.2%, minus 1%, minus 5.86. Then we had a candle here that would normally be interpreted as a turning candle, and it turned, and the next week we were up 4.7%, and everybody said that was the bottom. Next week, minus 4.8%. We were going a bit down. Then we had a plus 2.5. We had a plus 4. We had a plus 4. We had a plus 2.5. And people again said pretty much, they draw some lines here and saying, yes, the trend line is broken. Now it is upwards. Minus 3.7, minus 2.9, minus 3, minus 3, minus... You can see the trend here. And we were going all the way down. All of a sudden, we had a week and 2.5 positive. And yes, now the trend has turned. And then we had a minus 8, a minus 20, a minus... And you know, the rest is history. I'm just saying that in the financial markets, you should never say this cannot happen or this cannot go any lower. So I'm not trying to predict that we are going to have a 2008 scenario, not at all. I have no idea. What I am saying is that you should prepare and you should have a look at the macro perspective and seeing what is actually going on in the world right now. Is there something that could really change the way that people are looking at the numbers from the companies? Because what a lot of people are saying now, value investors, dividend investors, and so on, they're saying, well, with these numbers, the companies are getting way too cheap now. So I'm buying the good quality stock very cheaply right now. Yeah, well, that's okay. Let's have a look at Disney, for instance. Let's say that you are evaluating Disney to be a very good company. What you can see here is that the people buying in this upwards trend were saying, well, we like the new Disney Plus, we like the numbers, we might like that there's a new CEO coming in, and so on and so forth. But they were pretty much all of them looking backwards on the numbers and then estimated what Disney Plus would mean for the future. And that would be somewhere up here. What they didn't put into the calculation, because that was impossible, is that there might become a virus that we don't know yet. And that, of course, was a coronavirus. There might be a virus and that will destroy the entire season, summer season maybe for Disney. Nobody's visiting Disneyland and so on. And that is pretty much what is going on here right now. You could say that the Disney Plus and so on, that is streaming, that is home in front of the computers, so that might even help Disney a bit. But this is what happens when unexpected things happen, when things that we couldn't put into our calculation happens. And what you should be aware of now is that there can easily be a week or two where we are going up and you're thinking, oh yes, good, I bought on the dip. And then we continue down. It's not certain, but it could happen. Now, if I try to evaluate and assess what is the possibility of the market going further down, if we go back to the S&P futures here, then of course I want to look at what is driving this downturn in the market right now. And there's no doubt that that is the coronavirus. I also have a look at the economy that my personal opinion is that it is nowhere near as stable as we are told by different politicians. But that's another story. Let's just have a look at the corona right now. As you might remember, I am every single day, the first thing I look at when I turn my computer on is this COVID-19info.live. I'll put a link to it below as well. And I see a lot of charts posted right now on Facebook saying that, yeah, the WHO and the media, they're just trying to put up some scare campaign and so on. And then they are showing a scenario that, or a chart that looks like this. Exactly like we look here, and then dropping because they're showing the number of totally infected people, affected people or infected people all over the world. And of course, that will be going down for now. It will go up. You can mark my words here. It will go up in the coming week again. Because the reason why the total number of infected in the world is going down is that the yellow line here is going sideways. And that is from mainland China. You can see that they have next to no new cases. But all of the cases that had come in here, many of them have recovered because fortunately, only, quote unquote, around 2 or 3%, you can see here 3.4% a total in the world, but let's just say it's somewhere between 2 and 3%, the mortality rate. So a lot of people are fortunately recovering. So as long as China was the main source of new infected people and people starting to recover there, of course, the total number of infected people will begin to drop. But what you should pay attention to is the purple line here and the spread between these two. Because what you see here is the total confirmed number of coronavirus infected people. And this is China. So the difference here is the difference between mainland China and the rest of the world. And that is the graph you can see over here. And when we put that at a log scale here, you can see here that it is a pretty steady line where we're looking at the percentage. That's what we do on a log scale. We can see that it is pretty much the same percentage it is going up with every single day. It is actually going up in speed. And as long as this number keeps growing and the speed as to which it is growing is also increasing, then we will see a heightened level of instability in the financial world. I made a little spreadsheet where I'm putting the confirmed number outside mainland China in. Here we have the absolute number, so that is just these two numbers subtracted from each other. And here we can see the percentage increase, showing that here between these two dates the number increased by 3.7%. But what we can see is that percentage is going up, and right now, just from the last couple of days, we actually had a growth in number close to 23-24% just in 24 hours. So when we're looking at the graph, we can see that the numbers is increasing here, and what we can also see that the daily percentage gain for each and every day is also going up. Now 12,000 people are laughing a bit and saying, haha, that is just like a normal flu. Well, first of all, the flu have a mortality rate somewhere between 0.1-0.2%. What we're seeing right now is about at least 10 times as a high mortality rate. Let's just say that, and I made it so I could put a couple of numbers in here. Let's just say that we can keep the growth rate here at 23.3%. And that we are having 12,693 people. And let's just say that we are going on with that growth for the next 30 days. That leaves us with just about 7 million people infected. And if we have a mortality rate at 2%, that leaves us with 135,000 dead people. Well, you might say to yourself, yeah, it is only old people and ill people and so on. That might very well be. And personally, I'm not terribly frightened about the virus. But what you as an investor should think of is that what kind of effect will this have on the overall market? And what I've said to my subscribers the last couple of months, month and a half, so on, is that as long as this is contained in China, you should not be extremely worried until, of course, we get some supply chain issues, and that can be read in the numbers for Q1 and Q2. But what you should be really worried about is when we have 1,000 or 5,000 or 10,000 dead people in United States or in Western Europe at least, then the market will react, and they will react sharply. So if the markets are seeing that people are scared, and they might be scared for no reason, I'll not be the judge of that. But what they are looking at is the panic and the fear And if they can see that people are staying away from Disneyland and Starbucks cafes and restaurants and theaters and all sorts of stuff, and they are all of a sudden minimizing their personal consumption, let's say they're cutting it down with 5 or 10%, and they do that all over the Western world, then we will see some sort of Armageddon on the stock market. So I'm not saying this to spur out some fear and trying to be a part of this fear-mongering picture. What I am saying is that you should not neglect that 12,000 people right now can easily become millions and millions of people in a very short while. And even though a mortality rate of 2% sounds quite low, well, if we have 100 million infected all of a sudden, that is 2 million dead people. And that should be enough to make quite a stir in the financial world and in the markets overall. So that is the macro picture that I'm looking at. And I suggest that you try and visit this page once in a while, because hopefully we can see that this graph will start to look a bit like the Chinese graph. That is also an argument some people are making. Yeah, well, after a short while, China had it under control and now it's not a danger. So it also won't be a danger in a short while here in the Western world. Well, there is this difference that China has actually hit very hard, and they have closed down major cities. Millions and millions of people have pretty much been locked in the cities. China has sacrificed at least 1 or 2 percentage points on their GDP growth simply to shut down factories, complete production cities that they have. It has been completely shut down. There has been almost no export out of the largest harbors in China for the last several weeks. And to be honest, I'm not seeing the same willingness to sacrifice GDP growth in Western Europe and in United States. Also because that the GDP growth is a lot less, the numbers are smaller than it is in China, so China can sacrifice a couple of percent and still be in the positive. In Europe, if we sacrifice 2 or 3% in GDP growth, we would be in negative territory. So there is a big fear among politicians to start a new recession by simply closing down production and scaring people. So it is this act of balance between not caring about it and then it explodes, or being too fearful and then closing down the economy. And I am watching these numbers very, very closely, and I'm not seeing that it is possible in the Western world, and since we are in 50 or 60 countries, the coronavirus right now, we're seeing that. I'm not seeing that it's possible that all countries shut down their production and their commercial life in a way that they have done in China. But that is my fear. So I'm not myself on my own body actually fearing the virus so much as I am fearing the effect that the panic can have on the economy. But I still think that it is maybe a bit of an overreaction in the media, but we should care about it, and especially if the researchers that know about this says that we should be careful, then I think we should listen to them and not to some politicians trying to convince us not to be scared. I do like to listen to the people that are educated and know what they're talking about. All right, that's all for now. Later today you'll get a follow my portfolio video where I'll be going through all of my portfolios, what kind of performance they have been making here in 2020. Some of them, of course, the stock portfolios have not done so well, but some of the other, my day trading, my algorithm portfolios and so on, they have actually been very, very good. So we'll have a look at that later today. That's all for now. Take care of your money out there. Bye.